Hey guys, so what I want to talk today about is we're going to do some Q&A. First I'm going to talk about investment strategies and money management. And they're two different things. The investment strategies is a principle that I like to call the 40-40-20 rule. This is the best way to, me in my heart, I'm a gambler, but I'm a safe gambler, so I take strategic bets. So there's ways you can do this where some people decide to go in with one coin. They decide, listen, I'm just going to go all in on Bitcoin, or I'm going to go all in on Ethereum, or Litecoin, or one of the smaller altcoins. And that's a heavy gamble, because at any given time, any one coin can have huge swings. And so the reason I like to do the 40-40-20 rule is, if I do 40% Bitcoin, 40% Ethereum, and 20% the altcoins, the smaller coins, that gives me my shot at glory. Some of these coins that are only 2 cents or $1 or $10 or $20, they have room to go up to $10, $20, $100, or $500. For example, Ethereum, back in March, it was only at $19. And so that was considered an altcoin back then. But now, 9 months later, it's considered one of the top 3 coins. So you look at some of these coins that could become one of the main coins or could become one of the top 10 coins. Those altcoins give you your shot at glory. And the shot at glory is you put in a small amount, $100, $500, $1,000, $5,000, whatever is comfortable to you, that's the gambling amount. That 20% is gambling, because these coins have huge volatility. We've never seen something like this happen in our history, where a coin like Ethereum was $19 back then and is now $600 or $700 just half a year, 6 to 9 months later. You look at even just Bitcoin itself was under $1,000 back then, and now it's $14,000 or $15,000 just 6 to 9 months later. So the altcoins, or the smaller, more affordable price coins, look at Litecoin. When I first bought Litecoin, it was at 17 bucks. Now it's $200 or $300. So it's crazy to think about how fast and how big these coins can jump. But because of that, there's huge volatility, where you'll see huge spikes and huge crashes and then huge corrections. 6 different times Bitcoin has crashed more than 30%. But all 6 times, the jump back within a few days was 78%, over 100%, and then 2 or 3 times it was over 200%, all within just a few days of that huge crash, where everybody thought the sky was falling. Everybody saw, oh my God, it went down 30%, what am I going to do? When just the week before, it was half that price. So it was actually up a lot. Like, for example, right now, 2 days ago, Bitcoin was at $17,000. Then today it crashed down to $13,000. But when I say crashed down to $13,000, if you really look at it, just 2 weeks ago, it was $11,000. So did it crash down to $13,000? Or in a 2-week period, did it go up to $13,000? This is one of those rare investment times in our life where you just have to look at things a lot differently, because it doesn't happen like that. If a Facebook stock went from 250 bucks to 220 or 180 in one day, it would be like an international crisis. People are like, oh my God, billions of dollars of market cap changed hands. In cryptocurrency, it's just a Wednesday. It's just normal. People just have these huge spikes and crashes up and down. So you have to be able to stomach that. That's where these coins, the altcoins, those are your shots at glory. Those are the ones that, if you can stomach it, where you buy a coin for $6 and it goes all the way down to 3 and jumps back to 7, but has a shot to go to 10 or 20 or 30, that's fascinating. You look at a coin like NEO. Just 6 months ago, NEO was only $6. And a bunch of my friends bought into NEO, and they looked at it and said, listen, if NEO is kind of like the Chinese Ethereum, we really believe in it. So a bunch of my friends, all in these group chats, they all started buying NEO at $6. Then it went to 8, then 12, then it jumped all the way up to 50. Then 2 days ago, it went up to $70 or $80. And that's in 6 months. So it went from $6 to $70 or $80 in 6 months, which is insanity. That stuff doesn't happen in real life in the stock market or any other type of investment vehicle. In this case, it felt normal. It feels normal. But then yesterday it went from 70 or 80 and it crashed down to 50 bucks. The thing about it is, when you look at it and you say, did it crash down to 50? Did it correct? Or is it really up from $6 to 50 in such a short period of time? The people that are against cryptocurrency or don't want to see all the things that are happening, every time Bitcoin has a correction or a crash, they're so emotional and they're all over the media and they're screaming on their Facebook pages saying, oh my God, that's it. This is the end of Bitcoin. It's over. 30% crash in one day. But they're really quiet 2 days later when it jumps back up 78% or 100% or 200%. So what I want you to do is think about this strategy. You could go 100% into one coin. You could go 50-50 and just buy Bitcoin or just buy Ethereum and then a bunch of other little coins. The way I look at it is, I've been using this model. I've been telling other people to use this model, and it's to protect yourself. If you have Bitcoin, which is tried and true, the multi-billion-dollar, huge 800-pound gorilla of the space that's never going to go away, it is the behemoth, and it's gone through a lot of bad battles. Bitcoin has gone through hackings, and Jamie Dimon from JP Morgan going and saying it's bad, but then secretly he was buying hundreds of millions of dollars worth. Then it goes through another hacking where Bitcoin's not getting hacked, but people are making it sound like Bitcoin got hacked. Bitcoin can't get hacked itself. People got hacked or companies got hacked. And the media tries to make it sound like, oh my God, Bitcoin just crashed, it's all over. Bitcoin is the 800-pound gorilla. Bitcoin is not and will not be going away because people think it's been a long time. It's only been 7 or 8 years. But in most people, it's only been 7 or 8 months. So we haven't started talking about Bitcoin until 7 or 8 months ago. I was back doing Bitcoin in 2014 when I installed the first Bitcoin ATM into a casino in America, and I had to deal with the politics of explaining to the state of Nevada, the mayor, the governor, and then the casino owners and the accountants and the CFOs all to explain why they needed a Bitcoin ATM machine in 2014 when nobody was really talking about it. But we got international press over this machine being inside there because they were willing to be forward-thinking. That was at the D Casino in Las Vegas. That Bitcoin ATM machine was able to charge 5%, 10% type fees because people just didn't have a way to buy Bitcoin. So people would go there and try to buy $10,000 or $500 worth of Bitcoin with cash, and they were willing to pay 5 to 10% type fees because there just wasn't really a way to onboard Bitcoin. Nowadays, you have wallets, you have exchanges, and you have platforms like Coinbase, Gemini, Bittrex, Bitfinance, GDAX. You have so many different ways to onboard Bitcoin, which then can lead you to buy all these other coins, Ethereum, Neo, OMG, Sia coin, all these other coins that you may be interested in. The hub of it all starts from buying Bitcoin. So because Bitcoin is the most important, the biggest, it's over 50% of the global market of cryptocurrency, this is the one that's tried and true. I can't give you official investment advice, but if you look at statistics in the past, Bitcoin is the one that has been through all the volatility. It's fought through things. The governments in multiple countries have been onboarding it. Large corporations have onboarded it. Visa is now using it in a lot of different debit cards and allowing the transactions to happen in the back end. Bitcoin is tried and true, the leader of the space. Ethereum is my baby. Ethereum is the one that I got in. I was happy to get at $19. Some friends got in at $1, $2, $6. When I got in $19, the reason I was able to publicly tell people it's okay to start researching Ethereum and taking that chance and maybe putting in a small amount of money into it is because the Ethereum Alliance happened. And the Ethereum Alliance, if you look back in March, is when over 100 corporations, Fortune 500s and other big companies decided to start using it themselves. And so when the Ethereum Alliance was announced publicly, I said, okay guys, I can't give you investment advice, but you should really research Ethereum because the Ethereum Alliance has now proven that well over 100 corporations, Ford, Motorola, car companies, they all started saying that they're willing to use it. And I thought to myself, if it's good enough for all these major corporations and their lawyers to publicly sign off on saying they're going to use it at Intel or these big companies, well, if it's good enough for the Fortune 500 lawyer, then it's good enough for me. So I bought in at $19, and I had my friends buy in at that price point as well. And within 2 days, $30, then $40, then $60, then it goes to $100, and obviously now it's over $600. And it's been this wild ride. But what I've done along the way is I've taken safe bets because I've multiplied so many times on my original investment. Along the way, when it was around the $240 to $270 range, I was selling bits and pieces because I was up over 1,000%. I was selling bits and pieces to buy other coins, the altcoins, because I already had Bitcoin. So I was taking the profits from this and not removing all of it because I still believe in this long term. To me, Ethereum is, I look at it as still kind of like an altcoin, like a shot at glory, because I got in at $19. If you're getting into coins that are under $20 to $50, those are still your shot at glory because they have a chance to be a $100, $200, $300 coin. If you look at Litecoin, just 2 months ago, it was still 40 bucks. It was $17 most of the year, but it sat at $30 to $40 most of the summertime, and now you have a coin that's over $200. The true altcoins, the ones that are real gambles, those are your coins that are like EOS was at that $4 to $10 range. My favorite little one is called Sia coin. The symbol is SC. That coin is like half a penny to 2 pennies. So if you see a coin that's 1 or 2 pennies, well, for 10 grand, you have 1 million coins. For $1,000, you have 100,000 coins. So if you're willing to risk $1,000 and get 100,000 coins that are valued at a penny, you don't really have to go up a lot to have a huge impact. There was an interesting one that came out of nowhere just a week ago called Einsteintanium. I've never heard of this coin before, and my friends started showing me this, and it went from like 20 cents to $2.50 in 2 days. There's these rare scenarios where if you research and find out coins that you like in the altcoin space, and you believe in what they're doing, not just the hype, not just the new hot ICO or the pot coin that goes up for 2 days and then it goes right back down, not just the hype, but if you believe in what they're going to do, those are the fascinating ones where if you can buy in and they're 2 cents or 40 cents, or look at Ripple. I first bought into Ripple at 27 cents, and then it went up to 30 or 40, then it dropped to 23, and when it dropped to 23, I bought a bunch more, because if you buy it in at 27 and then you buy in more at 23, your new cost average is 25. So I lowered my investment from a 27-cent coin to a 25-cent coin on a coin I believed would be worth a couple dollars, because I believe in the company. I believe in what they're trying to do. And what Ripple is trying to do, it's called XRP, what Ripple is trying to do is make bank wires faster. There's hundreds of banks that they've already onboarded this year, and there's thousands more that they're going to onboard because bank wires are antiquated. There's no reason if I'm at Bank of America or Chase or Wells Fargo type bank, and I'm sending $5,000 to my friend, there's no reason it should cost $35, and there's no reason it should take 2 to 7 business days to send him a wire transfer. That's insanity. We're in 2017, about to be 2018. How on earth does our money take so long to go to transfer and be so expensive? Ripple is trying to fix that, and they are fixing that in hundreds of international banks. So I look at them as 27 cents, which I averaged down to 25 cents, as a solid investment because I believe in them long term. I looked at Sia coin when I first bought in at 0.37 cents, which is confusing when you say it, under a penny. When I bought into Sia coin, I was looking at them as a company, not as what's going to happen up and down along the way. There's a lot of emotional roller coasters when you look at small, affordable coins, because any little thing can make it go up and down so dramatically, especially when it's only a penny or only $1, right? When NEO is $6 and it jumps to 11, well, 6 to 11 doesn't sound like a lot, but it's a humongous jump. If you would have bought Facebook stock, or I use that as an example, at $6 and it jumps to 11, that's like a groundbreaking change. It's very rare for things to jump like that in the real world. In the crypto world, it's kind of, like I said, normal. So I look at Sia coin and I said to myself, they've built a better version of Dropbox, right? Dropbox is file storage. And so I thought, if they built a better version of Dropbox, that theoretically it can't be hacked because there's no one server that holds it. It's on hundreds of people's computers. So if it's a better version of Dropbox, it can't be hacked, and it's 1/8 of the price, I invest in something like that. So I'm looking at a coin like Sia coin and Ripple as companies that I would invest in as if they were a startup company. So I feel comfortable in them long term. I believe in the management, I believe in what they're building, and I believe that they can actually do it. Those are the 3 things that I always look at when I invest in startup companies. And I've invested in 28 different startup companies, and I use the same principles on the coins that I buy into. Will this coin be able to do what they say they're going to do? Is the management going to be able to follow through and perform this, or are they shady or weird? Are they not public with who they are? Did they take a huge amount of money off the table when they first started? All those things are red flags. So when I look at things like Siacoin or Ripple wanted to go prove to everybody that they're not just taking all the money, and they locked up billions of coins so that they weren't just people thinking they're just greedy and they just want all the money, right? You look at Siacoin, they didn't take tens of millions of dollars up front. They did everything the right way. So when you look at these companies, don't just look at them as coins. Look at what they do. Cryptocurrency is more than just a currency. It's the blockchain. And the blockchain is a whole esoteric thing that we could talk about for hours. But it's essentially making the world faster, more perfect, less hackable, and less controlled by the government so that we can do things in a perfect fashion and everybody confirms what happens on the blockchain. So that's going to happen in the medical field, the music field, entertainment, tickets. When you buy your tickets from Ticketmaster type things, you won't be able to have people screw you over when you're buying your tickets. Everybody's going to confirm it so you don't get a fake ticket. With music, you can buy pieces of music publishing of songs. Everybody can. There's just so many fascinating things that are coming out. There's an ICO happening called ShipChain. ShipChain is creating a better, faster version of being able to track shipping. And shipping is a multi-trillion-dollar industry every single year. And they brought on the CEO of DHL to help them run this thing. So, and I see these 45 different ICOs pitch me in a single month to either invest in them or join their advisory board or just listen to their read their white paper or listen to their pitch. I look at the ICOs that are actually going to do something. I look at somebody like ShipChain and I see these guys are building a real company. They brought on the CEO of DHL. They brought on a great chief marketing officer that I've known very well. They've hired the right types of staff members to help them build it. They hired developers. So I'm not talking about ShipChain to talk about ShipChain. I'm talking about them as an example of what you should be looking for if you're looking at investing in ICO, because ICOs are risky. ICOs are a true gamble of you're betting on them that they can perform what they're going to do before they've even started building it most of the time. There's some ICOs, like for the Bread wallet. Bread already had $4 billion under management inside of their wallet. So when they did their ICO last week to raise $20 million, they raised it in 2 hours. Because they're not an ICO of somebody trying to build a wallet called Bread. They're an ICO raising money to help fast forward the success that they already had. They're already the number one wallet in the App Store. They already had $4 billion worth of people's money and fiat and currencies and coins in their wallets. They already had all these things inside of them. So because of that, their ICO sold out in 2 hours. There's other ICOs where you have to guess and hope they're going to be able to build what they say they're going to be able to build. When Filecoin raised $252 million, which is an absolutely obscene amount of money for any one ICO, any one company to ever need, they have to now go out and build what they're saying they're going to build. And what they're saying they're going to build is really, really, really difficult. And I mean, I hope they do it, obviously. I hope they do it for their investors. I hope they do it for themselves. But I also hope they do it for the world. So look at the coin, look at the crypto, look at the currency, look at look at them as like a startup. Look at them like you would look at a business, and you'll start to flip how you look at things. Instead of just looking at, can I buy this coin for $4 and it go up to $8? Look at, can I buy this coin for $4 that long term is going to be worth $20, $30, or $40, but you can sell it along the way when it gets to $8 if that's what your goals are. And then let's say you put in $10,000. Let's just use a real world example. Let's say you put in $10,000 and you were buying into NEO when it was at $6. So if you buy $10,000 worth of NEO at $6, along the way at $12, you could sell half of your coins, recoup your $10,000, and now you're free rolling on the other $10,000 worth of NEO when it's at $12. It's a very rare scenario to be able to say something like doubling coins and then move on, because it just doesn't happen like that in most cases. There's never been a time in our history where people could do something like that. So in this case, where you have many, many, many coins, most of the top 50 coins, and especially the top 20, have all doubled, tripled, quadrupled, or sextupled, or 20 or 30, 40 times the value. Like Ethereum went from 19 to 600 or 700 now. That's a 30 to 40 time multiplier. And if you look back months before that, it's actually like an 80 to 100 times multiplier. You just don't have those scenarios anymore in any other industry. So with this, if you could buy something like NEO at $6 and it goes up to $12, you can take your 10 grand, remove that original 10 grand, and now that's your new bankroll to buy the next coins. And you can again split it up, 4 grand, 4 grand, 2 grand. Or you can take that 10 grand because you're free rolling, pull it back out and put it into your US wallet and put it into your bank. Or take that next 10 grand and buy the next coin. You say, you know what, I'm going to buy Sia coin, or I'm going to buy a portion of the ship chain ICO, or I'm going to buy more Ethereum or more Bitcoin. But you're protecting yourself if that 10 grand is an extremely important amount to you. If the 10 grand is not going to affect your life and you've doubled and you went from $6 of NEO to $12, you just have to have a goal of where that's going to go, where you are going to recoup your 10 grand or more. Other people like to take 1,000 or 2,000 at a time along the way to minimize their risk and be pulling out some capital. In this case, it's completely up to you. I just feel like the safe play is for people to remove their initial 10 grand and free roll the rest and buy into other coins or put that initial capital back in. If you're only investing 10 or 20% of your liquid net worth, which is what we'll get into in a minute, then you can decide the other way and you gamble. It's a safe gamble, it's a smart gamble, a strategic gamble, so it's not a pure gamble. A pure gamble is craps or roulette, right? In this case, you're taking a strategic gamble on something that you understand, or other people that are smarter than you understand. I didn't know everything. I started researching as much as I could, but I asked a zillion questions. I was in the crypto group chat, the crypto watch, crypto never sleeps, Ty's course, Ty's group chat, like all the telegrams and Facebooks. You want to consume as much as you can, because even if you think you're a genius, there's a lot more geniuses coming into crypto every single day. We went from having a couple hundred coins in the world as of this year. We have over 2,000 different altcoins now. So the next part is, after the 40-40-20 principle, I want to talk to you about money management. So money management is critical because just like a startup, the money is your fuel. If you run out of gas, that's it, right? If you have a fancy car, like a startup, restaurants are the best example. The reason that more than 80 to 90% of restaurants fail is they run out of money. And they just didn't have enough money to hit that turning point. You know, they just started getting into the flow of things. You can't make enough money at a restaurant because you have a capacity every single night, right? So even if you crush it the first few months, if you have a snowstorm or a slow period or rains or a hurricane or just slow season because of where your location is, well, your restaurant that was doing 40 or 50 or 60 grand a month in revenue now drops down to 20 or 30 or 10 because there's a quiet period. It's hard for restaurants to recoup from that, and so a lot of restaurants die. If the restaurant just had the extra 50 grand or 100 grand to survive the snowstorm or survive the hurricane or survive the slow season or survive the rain, they would have survived that 2 or 3 months of bad time and then be back to that $40,000, $50,000, $60,000 a month where they're stockpiling the money. It's the same thing with this. If you invested 100% of the cash that's in your bank account, or worse, you borrowed money, don't do that, or you borrowed money and put it in, if something were to happen on any of these coins, that's it. You don't have any fuel. You don't have any chips. It's just like being in a poker tournament. If you go all in and you have no chips, you leave yourself no outs. You're out of the tournament. You can't keep playing. So you want to make sure that you're not putting all your chips into any one coin and leaving yourself fuel for your fancy car. So if the restaurant has $300,000 in funding and it cost them $200,000 to build their place out, they spent 20 or 30 grand on marketing, they spent 20 or 30 grand on extra equipment and fancy grand opening, and they have 40 grand in their bank account to kind of help them with their startup costs for the first month or two. If they run out of money on month 3, it's over, right? That same company, that same restaurant, if it had 350 grand or 400 grand, much more likely would have survived through the bad period just by having more money. You need to look at yourself very, very, very honestly. If you have $10,000 to play with and you spend 4 grand, 4 grand, and 2 grand, you've diversified your risk, okay? But if that 10 grand is the only money that you have liquid, then it's insanity to use all 10 grand. You should be using $1,000 or $2,000 if you only have 10 grand, okay? Because you have a way for you to grow the money, but if something were to happen, you still have that 8 grand in your bank account to cover your overhead, to take other chances. Maybe now you say, okay, I want to catch up. I'm going to risk another $500 or $1,000 to catch up. But you can't now take the 8 grand you have left and risk another 2 or 3 grand because you put yourself in a close to crippling situation, just like in a poker tournament. The less than chips you have, the harder the moves become to make. So you want to make sure that you can protect yourself along the way by only risking small bets per hand. When you play in a poker tournament, it's a great example. You can't win any tournament on any one given hand until the final table, until the final 2 people. Along the way, let's say there's 100 people that start, there is no hand, there is no reason to ever be putting yourself all in some risky situation, because if you go from having 10,000 chips to 20,000 chips, it sounds like a big deal that you doubled up. But if you go from 10,000 chips to 20,000 chips and you're playing in a tournament with 100 people, there's 1,000,000 chips in play. So you going from 10,000 to 20,000 sounds good in your little microcosm of like, man, I just doubled up my chips, I'm ready to win the tournament. It's physically impossible because the other 9 tables aren't next to you. You're not in any hands with them, and you have to consume all 1,000,000 chips. So I would rather you be risking 1,000 or 2,000 chips per hand, and as the tournament's going, people are disappearing throughout the tournament and they're all getting knocked out, and you keep fighting through the tournament because you're giving yourself outs. You're giving yourself fuel to keep going. You're leaving yourself maneuvering, ways to maneuver by having that chip stack and having that money. It's the same principle here. By having yourself, if one thing happens and Ethereum goes to 0, you still have, out of your 10 grand, you still have 4 grand here and 2 grand here to keep fighting through. If something happens here to your altcoins, you still have 8 grand. You're giving yourself outs by splitting up your risk. You can obviously adjust this to fit your style. If you want to do 50, 30, 20, or 50, or 70, 20, 10, you can split it up however you want. I'm just showing you what has worked for me, what I've explained to people. Because this is a shot at glory, this should be around that 10 to 20% mark, because this is the most likely to fail. This is like the restaurant. This has the most likely shot of not working out. But it has such a huge upside. If Sia coin is 2 cents and goes to 10 cents, you crush it. If Neo goes from $6 to $60 like it did, you crush it. So leaving yourself money is really important. And the money management is critical because you still have to live your life, right? Cryptocurrency is trading 24 hours a day. You need to put in an amount that if you lost it all, your rent is still paid, your life is still paid, and things are going to continue to move forward because cryptocurrency is not going away. It is continuing to rise at a rapid pace and go through some roller coasters along the way, but it is not possible to go away anymore because the government can't shut it down. There's no CEO of Bitcoin. There's no office to rate of Bitcoin. There's no bank account to take from Satoshi Nakamoto. It doesn't exist. So there is no way to go shut down Bitcoin. It isn't in any one place. It's in all of our computers. It's all over the world, right? That thing applies to lots and lots of these current cryptocurrencies. So because cryptocurrency isn't going away, and so many hundreds of billions of dollars have come into cryptocurrency this year. Remember, we were at less than $100 billion market cap this summer, and now we're at a $400, $500, $600 billion market cap for cryptocurrencies combined, with Bitcoin making up over half that. So because cryptocurrency as a general market has grown well over 1,000% this year, there is no slowing down. The snowball is happening. Now you have huge hedge funds, countries, bazillionaires in Dubai and Shanghai and Moscow. I can't even explain the hundreds and hundreds of texts that I get every few days of just people saying, hey, how do I buy more Bitcoin? Hey, how do I buy this coin? Hey, what wallet should I use? Hey, what exchange should I use? Coinbase now has 13.3 million accounts. I mean, I had a Coinbase account in 2014, and you would have looked at me crazy if I said what Coinbase is, you know. But in 2017, going into 2018, these guys are getting 100,000 new accounts a day because people are just talking about cryptocurrency left and right at family dinners, with their friends, at work, all over Facebook. As you guys know, it's just nonstop crypto, crypto, crypto. So because of that, you can't stop the snowball. You can't stop these large corporations that are using cryptocurrency, these large hedge funds that are using it, all these banks are getting involved. It's just too, I don't want to call it like the Illuminati or too big to fail, but it kind of is that because you have too many big companies involved, too many billionaires involved, too many venture capitalists, and the local person, my mom, my cousin, my nephew, everybody started buying a little bits of coins. And so when tens of millions of people start buying in, it sounds like, oh my God, I can't believe tens of millions of new accounts are up on Coinbase and Poloniex and Bittrex and all these platforms. Tens of millions is nothing. It's like actually nothing. 13 million accounts on Coinbase, it sounds like a big number. It's minuscule compared to what our population is, what the amount of money is that's flowing in. It's just absolutely nothing. So we're at the very, very beginning stages of cryptocurrency. We're at the very beginning stages of what we're going to be as a market. What does that mean for the prices? I can't give you that type of investment advice. I can say the money, so much money is flowing in, and so few people want to actually sell along the way. So if you have a bazillionaire or you have a Winklevoss owning 1% of the market or a Chamath owning a couple percent, and you have 4 million Bitcoins missing, and this big hedge fund has a big allocation, you go from having 21 or 22 million Bitcoins, well, you have 4 million missing. These guys own a couple million. These hedge fund guys own a couple million. The general public owns a few million. The ICOs locked up a couple million. The mining pools for Bitcoin mining, they own a few million. Well, all of a sudden, your supply and demand is actually only X amount of million, but you have tens of millions of people that want to buy into that. So just by sheer math and the amount of money coming in and the amount of humans getting into crypto space, it looks like we're just at the very beginning. So I'd like to open it up to Q&A. Can we dive into that?
Yeah. So there's a few here.
All right, so the first one is from Stefan Kretschitov. Take the Warren Buffett approach. You pay the price, but you get the value. It means you still get your coin at a discount. Price versus value will always match. The tricky part in blockchain is nobody knows the real value because it is too new. So what's interesting about that point is we don't know what the true value of Bitcoin, Ethereum, or any of the altcoins are because it's too new. It's very true. Just a few months ago, we were all hoping and crossing our fingers, and there was media outlets all over the world saying, will Bitcoin hit $10,000 by New Year's Eve? And everybody's like, no, you guys are crazy, that's never going to happen. And then a few weeks ago, it's at $15,000, $17,000, right? So the smartest people in the world, the analysts, the Warren Buffetts that say, oh, it's a bubble, it's this, it's that, Bitcoin can't bubble anymore because if it has a 90% crash, it's still up 1,000% of what it started at a year ago. It's not, we're just at a point where people don't understand that. And when it has a big crash, it will, like it did yesterday, where it goes from 17,000 to 13,000, the catcher's mitt is too big. The catcher's mitt is a theory that's come up with in the publicly traded companies, where people buy up stock and because they want to keep a price value. In Bitcoin, there's a humongous market for it. There's too many people that want to buy coins. So if all of a sudden the price goes from 17,000 to 13,000 and the billionaire guy or the hedge fund guy or the VC guy or the wealthy guys or the mining pool guys, they will buy up the Bitcoin at those lower prices because they want to keep consuming it and accruing it. So if they want to keep accumulating Bitcoins, it's really hard for it to go from 17,000 back to $1,000 like it was at the beginning of the year because there's way too many people that want to buy it up along the way, so the catcher's mitt is too big. So to his point in the question, it is too new, and people are guessing if they're saying what they think the prices are going to be, or when they talk about tulips, or they're talking about the patterns of what's going to happen next. The patterns are too erratic because it's too small of a sample size to be able to figure out what's really going to happen. Right now, you have hundreds and hundreds of billions of dollars being onboarded into the market, tens of millions of new accounts being onboarded for Coinbase, Gemini, GDAX, Bittrex, Bitfinex, all these different platforms. So because of that, we don't know what those people's thought processes are, but we do know for them to be in the crypto game, they got to be buying crypto. And to buy crypto, they have to buy Bitcoin to then buy their other coins that they want to buy most of the time. Almost every time, people are starting off by buying Bitcoin and then sending it off to other wallets or buying other currencies from Bitcoin. So because of that, Bitcoin becomes, how do you say it? It's too big for people to think it's going to go away, because Bitcoin is the centerpiece to be able to buy all these other coins. You're not going and buying Litecoin or Bitcoin Cash or Ripple type coins to then buy other coins. You're buying Bitcoin and then going to buy your other coins. So Bitcoin still has its main place as being the 800-pound gorilla. So the next question is, what are your thoughts about staking a coin versus using their lending platform? So staking a coin, it depends on which coin you're talking about. Staking is a complicated thing to do, so you want to make sure that you have somebody help you through the process, because staking a coin takes a little bit of magic and understanding how to use these different platforms and how to store your coins. A lending platform, there's too many risky ones. There's different ones that are guaranteeing these really high returns. So you just want to be careful and do your research on the lending platforms, unless you're just lending your own coin to the coin owner that wants to either stake it or are willing to pay you some kind of interest for lending it back to them. The lending platforms, you just have to be careful of. There's a few that are good, but there's also the bad ones that give the industry a bad name because they're offering 6% a day and 4%. These numbers are insane. It's already crazy enough when you see something like BitConnect offering 1% a day. They've been doing it for the last 2 years and they're worth well over $1 billion. So maybe they're onto something. But when people are offering 4% or 6%, those things are just crazy for these lending platforms. So if you're going to use a lending platform like a BitConnect, just do your research. Make sure you're only putting in an amount that you feel comfortable with, because some people look at it as a Ponzi scheme. Some people look at it as a very risky scenario. Some people think they're just taking the money. And other people are excited because it's doing daily payouts every single day. And other people are using it to compound their money or remove money every single day. So you just have to look and research what you feel comfortable about with companies like BitConnect. The other ones that are not 1.4 billion or whatever BitConnect is worth, the other ones that are not that big, you have to look at it because those are either based in, how do I say it? They're based in a model of offering way too high of a percentage. If somebody's offering you 6% or 4% a day, well, if you just do the math, at, let's call it 4% a day, that would be a couple thousand% in a year. So that's insanity. That's not a business model that can survive. For BitConnect, for example, at 1% a day, that's 365% in a year. That's insanity by itself. So I don't know how they're going to continue to keep doing that. Luckily, they have billions of dollars and they have what they call volatility trading, is what they're saying is how they're making the money. But these other platforms, they're not offering that. They're just saying, lend us your Bitcoin and we're going to give you back 4% or 3% or 6% a day. That's insanity. It's not really mathematically possible to offer people thousands of percent. So just be careful and do your research on those things. The next question from Ahmed is, what do you think of coins that deal with renewable energy? Are they promising? Do you see them going from pennies to the two-figure mark anytime soon? Coins such as Power Ledger or Kilowatt Coin, also endorsed by John McAfee. Also, what cryptos do you believe would absolutely moon in early 2018? So when coins are focused on renewable energy, that kind of goes back to what I was talking about, where it's really interesting and important to look at and invest in something that you believe in. So with renewable energy, that's something that we know is important for the rest of our lives, because without renewable energy, we won't have a planet in 10 or 20 years. Because guys like Elon Musk are creating lots and lots of different things to create renewable energy, and there's hundreds of companies that are focused on creating renewable energy. If there was somebody that's having an ICO and creating something for the blockchain that was going to help the renewable energy companies, that would be fascinating and interesting to invest in. What you have to do is pick, because there's probably 10, 20, 30, or 40 ICOs about different renewable energy ICOs. So you have to go in and research who are the founders, who are the advisors, can they build what they say they're going to build, and how much money are they raising. If they're raising some insane amount of money, like Filecoin raising $252 million, which is just an unnecessary amount for any startup to need. If they're raising that kind of money, it just turns me off, because they just don't need that kind of money. They just physically don't need it. No startup. Have you ever heard, like, Postmates comes out, they didn't raise $252 million in month one. They raised $1 million, then they raised 5, then they raised 20, then they raised 100, then they raised 250. And that happens with most companies. They start with a 7-figure raise, well, they start with 6 figures from their friends and family, and they raise the low 7 figures for their A round, then they raise 8 figures for their B round, and they raise 9 figures for their C round, right? And then if you're a big company like Uber, you'll raise a D round, which is, 500 million, $1 billion type numbers. When a ICO like Filecoin raises $252 million, they skipped right to their D round. That's insanity, right? They've skipped right to a 9-figure round. God bless them. I hope they do it right, because that's what's important to our community, is to keep things clean, keep things honest, and build what we're saying we're going to build. But you should look at these renewable energy companies and make sure to protect yourself that they have a good management team, they have trusted advisory board, and they're building what they say they're going to build. As far as what cryptos I believe are going to absolutely moon in early 2018, I can't give investment advice, but what I can say is there are coins that you should be researching that have gone through some of the battle-tested things and have some strong people behind them. I think it's interesting, LSK, it's called LISK. I think there's one called OMG, NEO, Ripple, obviously, because Ripple is one of the top 5 coins and they're doing something right. These are coins to look at for the long term. So these are not things I'm saying that are just going to absolutely moon early 2018, because they've already gone up a ton. And so you have to look at these things and say to yourself, if I buy a coin like EOS at $11, will I be happy, ecstatic if it got to 15, or do I want to wait till it gets to 20, 30, or 40? And obviously, Ethereum and Bitcoin are still important to be part of your portfolio, because they help weight the average of whatever happens here. And then my favorite small one is called Siacoin. The symbol is SC. It's kind of what we talked about. It's the better version of Dropbox. And I think that one is fascinating because it's only 2 cents. So look at those type of coins. There's obviously other ones like Golem that are poised to do well. But you want to look at the coins that are doing something of function. You look at a coin like Monero, and they're trying to do something of function for the privacy space. You look at Ripple, and they're fixing something in the banking industry. There's other coins that just don't have the function that you believe in, or that you don't know what they're doing. Like if you don't understand Bitcoin Cash, or you don't understand what Litecoin is, you don't have to make that part of your investment portfolio just because you see it going up and down. You want to invest in the ones that you understand. And if you don't understand it, research it, or start asking people, or go and do what you're doing, which is great, and go into things like Ty's course and trying to learn from experts about what's going on. The next question is, what's the coin sign that he keeps talking about, Siacoin? The symbol is SC, Siacoin. Can we scroll down? And you have to look at some sites like Poloniex.com or Bittrex.com. You have to look at those type of platforms to find it. Right now, Coinbase only has 4 coins on it. A lot of people are looking at what's going to be the 5th coin or 6th coin on Coinbase. Those are the type of coins that people want to invest in because they want the hype. They want to invest in, like when Bitcoin Cash went on Coinbase a few days ago, it went from this price to 3,600 and then crashed back down during the crash. People are looking at it for the hype. So there's a lot of rumors of what the next coin is going to be that goes on Coinbase to have the Coinbase effect. You don't want to be investing based on rumors. It's good to be alert, and it's good to know what's going on in the market, but you can't just be investing on rumors because it's risky. You don't know where the source came from. Like you hear a lot of people say names of what's going to be on Coinbase next, and I've heard them all tell me the secret source told me this coin's going to be on Coinbase by September. It never came. By October, this coin's going to be there. It never came. By November, no matter what, these 2 coins are both going on. It never came. So be careful with the rumors. Really do your research. You can be reactive, but be reactive quickly. So if you see a coin that you think is going to go on Coinbase, or like a coin like LSK, which is called LISK, they're going to be doing a rebrand. You just have those coins on alerts, and you look to yourself and say, look, if it's trading at $10 to $15, if it goes up to 16 or higher, I want to buy it, or vice versa, because you know all of a sudden that the rebrand was announced for LISK and maybe something big happened. Or vice versa, you say, if it drops to $8, I'm going to buy it no matter what because I know that the rebrand is coming and I'm hoping that it's going to rise. Look at your investment strategy like that where you find out what the rumors are, you find out what the truth is, and then kind of blend those two things together to make your decisions on what you're going to buy into. The next question from Monique is, how do you feel about the extreme drop that occurred with Bitcoin, Ethereum, and Litecoin yesterday? So that has happened multiple times. Like I said, Bitcoin has dropped 30% 6 different times this year. And all 6 times has raised from 70 to 260% within a few days. Every single time, all 6 times, it crashed down 30% and then spiked back up. So I'm not scared of these huge swings, and I'm not scared of the crashes because I'm not day trading, I'm not selling. So when people say I lost all this money today, I didn't feel like I lost any money today. I can see that my balance has changed in all the different wallets, and I know mentally that my balance changed, but my coin amount didn't change. If I have 1,000 coins or I have 1,000,000 coins, right? The price fluctuation changed dramatically yesterday. It went from, let's call it Bitcoin 17,000 down to 13,000, or Ethereum goes from $800 to $600, or Litecoin 350 or 400, whatever it was at, down to 220 or 230. Those are dramatic losses. However, that's only a loss on a balance sheet. It's not a loss for a sale. I didn't lose that money because I'm not selling it. I'm holding on to these coins. The nickname is HODL because HODL stands for hold on for dear life. You have to hold on for dear life because you're going through a roller coaster. Some of these coins are going to have a 30% crash like we saw yesterday, but the roller coaster always comes back up. That's happened to us 6 times in a row. Whether that means that this weekend or the day after Christmas it's going to go back up, no, it's not guaranteed. Obviously it's not guaranteed. But 6 times in the past it has done that. So you have to look at that and think to yourself, if it's gone through these crashes before, we can't call it a crash when it's up 1,000% or 2,000% or 3,000% when it goes down 30. Does that make sense? If I bought into Ethereum at $19 and it went up to $800 in under a year, and it goes from $800 and it crashes down to $600, did I lose 30%? Or am I up 2,000% or 3,000% in 1 year? So you have to think about it how you're looking. If you're day trading, it's frustrating. If you're holding, you have to be able to go along for the ride and be able to HODL and hold on for dear life. Can I use the same wallet address to receive all cryptocurrencies? This is a question from Ken. I'm using my Ether wallet. I use only one same address. I can receive Ethereum. I also use the same address to receive Ripple, but it is 5 days. I still don't see my Ripple in the wallet. Do I have to create different addresses in my Ether wallet to receive different cryptocurrencies? If you sent Ripple to your Ethereum wallet, you're never going to get it. And you have no way of recourse. You're never going to get it back either. Over 4 million Bitcoins are missing because of situations like this, because people send it from Bitcoin to an Ethereum wallet, or to a Litecoin wallet, or to a Ripple wallet. So it's very, very critical that you study these things in advance, because there's absolutely no way for you to get your coins. If you sent Ripple to an Ethereum wallet, that's it, it's over. There's nothing you can do. It's not the fault of the original platform. Let's say you used Poloniex or GDAX or Gemini. If you send Ethereum from Poloniex to my Ether wallet, that Ripple to Ethereum exchange will never happen, and it's not their fault. It's not their fault. So it's critical that you only you only trade and send Ripple to Ripple, Ethereum to an Ethereum wallet, Bitcoin wallet to a Bitcoin wallet. And be slow. You do not have to do this really fast. When you copy and paste that code, remember the first letter and the last letter, and make sure there's no spaces or any letters attached. So if the first letter is a 3 and the last letter is an X, make sure that you see in that 26 letters code the 3 and the X when you copy and pasted it over here, because it's critical. One wrong letter, you're not going to get it. One wrong letter, not only you're not going to get it, there is absolutely no way of getting it back. So you have to be very, very careful. So on my Ether wallet, you should be accepting Ethereum. You shouldn't be ever sending Bitcoin to an Ethereum wallet because it's not possible to get it. It's not how it works. So you have to make sure you send it If you're sending Litecoin, you send it to a Litecoin wallet. Bitcoin to a Bitcoin wallet. And never, ever, ever mix and match. It's not possible. When you're asking people to send you cryptocurrency or you're sending it, always double check. Is this your Bitcoin wallet address? Is this your Ethereum wallet address? Whatever it is that you're sending to, double check from their side, and also double check when you're receiving it, because if they say that they sent you $500 and you don't get it, they're gonna be like, oh, maybe they might think you're lying to them because they sent you Bitcoin to your Ethereum wallet and they messed up. So you always want to double check from their side and from your side, make sure it says, this is my Bitcoin address or my Ethereum address, and make sure you see the first number and that last letter to make sure that's the right code. The next question is, what low-cost coin are you looking at right now? That's from Eddie Smith. So obviously I keep talking about Sia coin because it's only 2 cents. The other low-cost coins, I think it's interesting, EOS. There's some people that love it, some people that hate it. Brock Pierce, who's the co-founder of EOS, he's been on Ty's shows before. Brock Pierce is the chairman of the Bitcoin Foundation. He has well over 100 angel investments into the cryptocurrency space. So I'm betting on that quarterback. I'm betting on a guy that has proven success. He has a track record. He has unlimited connections. He has a vision. So if he's going out there, he did the first raise to invest, like a fund for crypto, and he funded it in a couple hours. Like, I look at a guy like that has over 100 investments, and he's involved in so many different coins. Him putting himself as a co-founder of EOS, that's fascinating to me. So we were speaking at the same event just a few weeks ago, and it was at $4, and now it's at $8 or $9. So that's a fascinating thing. It jumped to $12, and then it had a crash from 12 to 9. So did it crash from 12 to 9, or did it go from 4 to 9 in 2 weeks? So I look at those that are a low-cost coin, but I also want you to think about the fact that Bitcoin can still be considered a low-cost coin for you. It's not about the amount. If Bitcoin is $14,000, you don't have to spend or invest $14,000 and buy a full Bitcoin. When you're talking to your family and friends about cryptocurrency, you have to be patient with them, because a lot of them think they need to put up $14,000 to buy a Bitcoin. They don't. They can buy $100 worth of Bitcoin, or $20, or $2,000, or $1,136.82. Any amount of Bitcoin that you want to buy, you can, and the percentage change is still the same mathematically. So Bitcoin, you're like, oh, it's too big or it's too high. When it was at $5,000 2 months ago, people said it's crazy. $5,000, this is nuts. I would never buy it at $5,000. And then a few weeks later, it's at $10,000. So the math from $5,000 to $10,000 is still a 100% increase. The same way EOS went from $4 to $8, that's a 100% increase. So don't look at it as just a low-cost coin, because any coin can be a low-cost coin of what you buy of it. If you're looking for something that has a huge shot at glory, then you're looking at coins that are in the pennies or in the dollars. Gollum is another interesting one. Monero obviously is interesting. There's different coins like OMG, NEO, and LSK. Those are all like 10 to 20 bucks. NEO is more expensive. It's like 60 bucks, 50 bucks right now. Those type of coins, if you're just looking at, I want to own multiple coins of something, those are the price points. You're not going to go buy multiple Bitcoin because it's very expensive unless you have a huge bankroll. But Ethereum, Litecoin type things, if you have $1,000, you can still own a couple of them. With the smaller coins, if that's what you're looking for, and you just want to feel like you own 20 or 30 NEO, then you can buy those at the $50, $60 range. Or if you want to own 100,000 Sia coin, then you have to put up, $1,000, $10,000 type amounts. All right, so the next one is, what do you think of Burst coin? I don't. There's 2,000 different coins. There's a lot of hype. There's a lot of coins that come out, like when John McAfee brought up the Burst coin today, it just spiked insanely. So that to me is interesting because of the hype. It's interesting that people can talk about a coin, it goes crazy and people buy into it, but that's not an investment strategy to me. That's hype investing, and you have to be day trading to do that. I buy coins and hold them. So if you're looking at buying a coin that's $1 and it's going to go to $2.70 because of somebody like John McAfee tweeting about it, that's okay, but you just have to be prepared the other side of it, that a lot of times those can just plummet. And you have to know what your number is that you want to sell it at. So if it goes from $1 and jumps to $2.70, that burst coin, for example, you have to think about, was I willing to sell it at $2 or $3 and just pull out because I know it's only going to be hot for 24 hours? It could continue on and go from $2.70 up to $15. And you have to determine, are you willing to take that ride, or are you content making $1, putting up $1,000 and cashing out at $2,700? You have to think about your risk and what you're willing to gamble on. If you're happy taking the $1,700 profit, you have to be okay with it going to $10 or $20 where you're missing out on $10,000 or $20,000. But on the flip side, if you buy something and it's just for hype and you ride it up to $2.70 and then it goes down to 30 cents or 20 cents, you have to be comfortable going through that roller coaster. Next question from Tiffany Gentry. I've been doing a lot of research and saw the video with the coins that Jeremy Gardner recommended. Since his video, prices have gone up a lot. Is it too expensive to buy now? And if so, what coins do you recommend that have great potential? So the timing is the fact lots and lots, if not most coins in the top 50 are all going up. And in 2017, pretty much all of them went up 300% to 3,000 or 4,000 or 5,000%. So everybody's a genius. I'm not saying anything about Jeremy Gardner because he knows what he's talking about. I'm saying that in general, people giving you crypto advice, Jeremy's a very smart guy, but in general, people can say a coin, and if it's in the top 50 and they said it this year, they're ultimate geniuses because all the coins went up. So it's like throwing spaghetti against the wall, except all the spaghetti stuck. So you just look like a genius, right? Let me see what that one is. The next one is, so the coins to look at, I've been kind of going over which coins to look at. So I'm going to jump to the next question from Daniel Seif. Outside of Coinbase, where would you say is the best place to buy coins, and especially the smaller ones? So I think there's a few platforms that are best. There's Bittrex. Bittrex.com is Bittrex.com. Bittrex is the most complicated and easiest of the platforms because it feels most like a stock trading platform. So Bittrex is important, so make sure you do your research and understand how it works. But Bittrex is a really good one. Another one I like is Poloniex.com, Poloniex.com. Poloniex is a simpler one where they only have top, 30 or 40 coins. They don't have every single coin. They don't have Neo and some of the coins I wish I could have got more of. But Poloniex is one of those smooth platforms. All the text is easy to read. It's easy to buy and sell. It's a smooth platform. It's important for you to open multiple platforms and get yourself verified on them to try to get your limits increased. Whether you're going to buy now or later or want to buy a bigger amount later, it's better to spend the time now because they're so back-ordered. Like some of these platforms, Bittrex, Bitfinex, or Bitfinex, GDAX, and Gemini. Gemini and GDAX are really interesting ones. So Coinbase is actually the owner of GDAX. GDAX is a very, very quick platform that also feels kind of like Bittrex. So GDAX would be a good one. And the last one I would recommend is Gemini. Gemini is similar, the Winklevi have that one. And Gemini essentially is like Bittrex, and it's one of those platforms that's just not going to go away. They have a ton of funding, and they're doing a pretty good job of keeping things up. Coinbase is only for the top 3 coins, and now the 4th coin, Bitcoin Cash, just came on this week. Coinbase is usually going to be your easiest one to onboard US dollars. And then from Coinbase, most people then go off to Bittrex and all these other type of platforms. The next question is, all right.
This one?
Yeah. So he says, Johnny Lin, could you speak to buying US dollars versus Bitcoin and then US dollars to Ether and discuss their equally somewhat slow transfer speed from Coinbase to Bittrex? So it's always easier to buy Bitcoin first. Once you have your Bitcoin, then if you want to buy your Ethereum or your other coins from Coinbase to Bittrex, the speeds are from the miners. So imagine I'm sending $100 to Kevin Ostage, and I'm saying, I want to send him $100 of Bitcoin. Well, I need 5 to 20 people to now confirm that I sent him that $100, right? Those are the miners. That person's getting 37 cents, 37 cents, 37 cents, whatever the amount is based on the amount I'm sending him. And they're getting paid that small fee to confirm that I sent Kevin Ostage $100. Through that process, the network got slow because nobody expected tens of millions of new account holders to start trading Bitcoin every single day. So there was only so many miners out there mining Bitcoin to confirm the $100 between Kevin Ostage and myself. So those people, there's not enough of them right now mining Bitcoin. There will be, people will catch up, but if this many new accounts keep opening, we're going to need millions of machines out there to help mine faster. So when you're sending Bitcoin from Coinbase to Bittrex or to Poloniex or any of these platforms, there's going to be a delay because you need the miners to confirm it, and the network is congested and slow because there's millions and millions of transactions happening per day now, where there used to be only tens of thousands a day. So the speed, some of them it's about the platform, and some of the speed parts, the problems are about the network itself. The next one is for Manil. How to protect my currencies from the market's volatility without cashing out the profits. Should I put this into a hardware wallet for it not to fluctuate and depend on the market trends? So if you take your coins, like an Ethereum, Bitcoin, Neo, any of these, and you put that, let's call it 1 Ethereum. If you put that 1 Ethereum into your hardware wallet, it's still the exact same fluctuation because it's still the exact same value for the 1 Ethereum when you bring it out. So when you put the 1 Ethereum inside of your hardware wallet, you have not now frozen it in time. You're not freezing it. You're transferring your Ethereum to, let's call it a Trezor. You're putting your Trezor in your Trezor wallet, which is a hard wallet, or cold storage, what some people call it. You're putting your Ethereum onto your Trezor. It's now in your hard wallet or cold storage. That Ethereum is still going to have the same price fluctuations. So if it goes from $800 to $2,000, it goes from $800 to $2,000 from your Trezor. When you send it out, it's still 1 Ethereum. You only send in 1 coin. You didn't send in cash. If you send in $800 in cash, it wouldn't be affected by Ethereum price, but you didn't do that. You sent an Ethereum coin into your Trezor, and your Trezor is holding 1 Ethereum, which is worth $800, for example. So whatever happens to the prices out here, if it goes to $400 or $2,000, the same thing is still happening in here in your cold storage, in your wallet. Can we go to the next one? And yes, you should put in hardware wallets if you have more than an uncomfortable amount. What that means is when you start to have $10,000 plus, you should have it in a Trezor or a ledger. You want to have it offline because you don't want to get hacked. So I have so many different accounts and Trezors and this and that, so that people are going to try to hack me. I don't have any one thing that they can go after, and I try to keep it all offline in safety deposit boxes. And so you're the same way. If people know you're buying Bitcoin and cryptocurrency, you want to protect yourself. Use all sorts of different email addresses, use different wallets, take it offline, put it into a Trezor, store it, put it in a safety deposit box, or put it in a safe. You want to protect yourself. When you have smaller amounts, if you have $300 or $800 on a wallet, you don't need to spend as much time or worry because you want to have access to that cryptocurrency. When you have $8,000 or $10,000 or $500,000, whatever the number that's important to you is, once you start to get into those 5-figure amounts specifically, you really want to put it onto a Trezor so that nobody can try to get to you or hack you.
Hey Dan, can you answer some of these Facebook ones?
Sure.
Can you see it?
Yeah.
I can read it to you.
Sure. I can see it.
Okay.
Can you scroll down?
Tell me when to stop.
Okay, so Michael Hull said, Dan, could blockchain be used to transfer info for the healthcare industry? Is there an ICO or coin that does that? So there's a bunch of different ICOs that are coming out for the healthcare industry. The one struggle for them is there's some very, very strict laws about sending private information from hospital to hospital. Very, very strict. I think that the blockchain can cure that because they can encrypt it and split it up. So if my healthcare information goes from Cedars-Sinai Hospital to a hospital in New York, if God forbid something happens, Normally, that's a very tedious, hard process to get approvals to send my personal information across, right? In a time that matters. Like if there's an emergency that happens in a critical time situation, sometimes it's very, very slow because they have protection set in place for that private information. So blockchain can cure that, but they have some struggles to get Cedars-Sinai Hospital and Kaiser Permanente in New York to be safe and comfortable and approve that they're going to accept the blockchain to do those type of transfers. So I would research it. If somebody does figure it out and somebody does get approvals from hospitals and doctors and veterinarians and pediatricians and dentists, there's all different niche markets. I think those are very interesting ICOs. I think those are very interesting to help change the world and improve the world because we need more speed in the healthcare industry. I just think that their one big hurdle is getting hundreds of thousands of doctors or tens of thousands of veterinarians or whatever the pediatricians, whatever that market is, optometrists, any of them. It's just getting them all onboarded to utilize the blockchain to be able to accept what's happening, because the future sometimes takes a bit for people to catch up with. Yeah. All right, so James Frederick King says, I feel like having friends involved helps way more than those who don't. It's a bigger risk, but if you're buying low, then what the heck, why not, right? So in that principle, I have group chats that are all different. I have a group chat with wealthy friends. I have a group chat with friends that are buying small amounts. I have large Telegram groups, and then I have massive Facebook groups. Like I think the Crypto Watch is up to 15,000 people. Crypto Never Sleeps is up to 2,000 people. So when you have 15,000 people, the amount, what their information is, what their cash amount is, and what they're investing is very diverse. But my main group chat is like 7 guys that are buying large amounts. And so you want to be talking with friends that are buying similar amounts to you. So if you're investing $5,000, you don't want to be sitting there trading and talking with the guy that's putting up $1 million because your investment theses are different and their risk profile is much different. It's still fascinating to hear from him and to see what he's looking at, but your investment style for $5,000 and $1 million is 2 totally different things. Vice versa. If you're investing $20,000 and your aunt, uncle, and then your 2 friends from high school are putting up $300, their investment philosophy or just buying some coin, they're buying a Bitcoin or buying a piece of Ethereum, it's a totally different discussion. So your group chat is different. What you want to do is have like-minded friends. So if you're going to put up $5,000, you want your other friends putting up $2,000, $10,000, $20,000, not together. I mean, you can do that as well. But you want them to be in the same ballpark so that when you guys are in the group chat, you're excited about the same things, you're scared about the same things. Like the news articles that you guys are sharing are relevant to the other people. Like if somebody shares a news article about something that's, this $20 million ICO is happening, that's not relevant to your aunt, uncle, and 2 friends from high school, right? They're not going to buy into the $20 million ICO with their $300 in Bitcoin, right? Vice versa, if you're investing $1,000, you don't need to see articles about $20 million and $200 million type things because that's not relevant to you. You're just trying to buy $400 of Bitcoin, $400 of Ethereum, and $200 of Ripple and Litecoin type things, right? So make your circle be like-minded. It's okay if there's some people that are doing a little bit more. But when you start to have people that are investing 6 figures and you're investing 5, or vice versa, you're investing some large amount and they're investing too small, you just want to make sure your investment philosophies are in line with each other. What's next? Why do prices go down and up? So that's what Kiwan's asking. Prices go down and up for various reasons. FUD, F-U-D-A, is one. That's the nickname for press. And it's a lot of time it's fake press, it's made up press, it's hype, it's news stories, it's speculation, I call it noise. So FUD, you're going to see that a lot when you're in the crypto talks. It's the major cause for huge fluctuations when it gets enough press. So something like Bitcoin with Jamie Dimon, when this guy from JP Morgan says, Bitcoin is a bubble and it's a scam, it's this, it's that, Bitcoin had a humongous drop, 30%, over the next few days, it skyrocketed back up and fought through all of the bad news or the stupid news or the stupid rumors of this guy, Jamie Dimon, going off and saying all these bad things. And then a month later, you find out him and his people were actually buying lots and lots of Bitcoin along the way. So he was manipulating the market in a sense. So that's one reason prices go up and down. The next reason prices go up and down is intrinsic value. If a coin like Ripple goes and gets and signs some major corporation or 200 new banks or one big deal with some, Microsoft or Bank of America, if a coin goes and gets a big actual, not just a story, but like a big deal, that will cause a price usually to go up, very rarely to go down. If a hacking happens and a wallet gets hacked, an exchange gets hacked, a certain individual with a lot of money gets hacked, if something happens with bad news about a coin, that will have a dramatic decrease. If something like going on to Coinbase, like with Bitcoin Cash, that will have an extreme increase. So the prices go up and down based on news, fake news, and real actual fundamentals. The other thing is long term, the reason most coins have been going up this year especially, there's just a supply and demand factor and hundreds of billions of dollars coming into the market. When the market was less than 100 billion this summer, and now it's 500 or 600 billion, whatever it is now, that's a humongous difference. It's 600 to 1,000% difference. It's insanity. Naturally, the coins are going up because of that, because there's just so much new money coming in, and the only way to get in is to then buy coins. And the only way for people to buy coins is for people to sell coins to them. So if I have a coin that's $6 like Neo, and you offer me $6, I don't want to sell it. But if you offer me $7, okay, I'll sell it. Now the next person says, I want to buy Neo. Now 1,000 people say I want to buy Neo. Now 1 million people say I want to buy Neo. But then there has to be a bunch of guys like me that are willing to sell it at $7. I don't really want to sell it at $7. I like my Neo. Okay, you'll pay me $8? No, I don't want to sell it yet. Oh, $10? Okay, I'll sell it. That keeps happening where then Neo gets all this hype and news and all these millions of people come in and they're all offering a little bit more, a little bit more, a little bit more, where Neo now sits at like $50 in less than 4 or 5 months. So things like that can go from $6 to $50 simply because so many humans and so little people are willing to sell it causes supply and demand. Any other ones?
We can go back to.
Okay.
Did you answer?
Yeah,
that one?
all of those, yeah.
Did you get this one?
I'll go to Brendan. So Brendan Elias, I had a lot of Bitcoin ready to buy altcoins, but because I'm in Australia, I was sleeping. When I woke up, things recovered 50%. Should I buy or wait for the next dip? So it's hard because we don't know when the next dip is, and we don't know how these things are going to happen or play out. So you have to think about, if you're buying it just to sell it, then you should be looking at dips. If you're buying it to hold it long term, you should care about dips, but not dramatically, because the dip, it helps your cost average, but it's not some magical change in your long-term vision. Because what bad could happen is, if you liked a coin at 20 bucks and you love it at 16, but you don't buy it either, you miss out on it going up to 40, 50, or 60. So if you liked Neo at $6 and you're like, I'm going to wait till it goes down to 4, but it goes from 6 to 50, think about how much you missed out on by saying I was going to buy it at 6 and I was just going to wait till it got to 5 so I could save 15 or 20%. You were trying to save 15 or 20% and you missed out on 1,000. So sometimes you have to look at if the dip, like today, the dip was 10 to 30% on most of the coins. If you're willing to buy it at 10 and it drops down drastically down to 7, because that's a 30% loss, that's a huge loss. But you were looking at it to go up to 20 or 30. You have to think about what the difference is to you on a long-term level. If you're buying it to sell it, it matters dramatically. If you're going to buy it at 7 to sell it when it gets back to 10 or 11, that is when you should wait for the dips specifically. If you were buying it because you wanted this coin to go to $40, $50, like Neo, for example, then what you don't want to do is say, I was going to wait for the dip. When it got, let's say when NEO went from $6 to 10, you're like, when it goes back to 6, I'm definitely going to buy it. But then it goes to 14, and then 20, and then 28, and then 50. You're missing out on trying to save 10, 20, or 30%, and you're missing out on something going up 500% or 1,000%. So buying the dip is important when you can do it. It's really hard to time it because it's a 24-hour market. Like you said, you were sleeping, so you just have to be careful of those things. And you can also set price limits of when you want to buy low and high, so those things happen kind of automatically while you're sleeping. Let's go down farther. Okay, so Nelson Barrios says, where should we go to do research? The best places to go is honestly looking at what's happening on coinmarketcap.com. Coinmarketcap.com, you're not going to get news there, but you're going to see real-time fluctuations of all the coins, and you can go in and start researching the reports. And then when you see coins that matter to you, you can go to the next site and start researching them. The crypto news, if you look at cointelegraph.com and some of these bigger news sites, those are the places that you should be looking at to find out as much news as you can. You just kind of want to scroll through the noise. If you see hype articles, or you see articles about coins that you don't care about, or you see articles about things that are relevant to the coins that are interesting to you, don't waste your time getting lost because there's 2,000 coins and there's hundreds of ICOs. So just be cognizant of what you're trying to research and stay specific. You can also set up Google Alerts and say you like OMG, NEO, Lisk, Sia, Ripple, Ethereum, Litecoin, and Bitcoin. Say you like those 8 coins. You can set up Google Alerts so that any news article happens about specifically your coins, you could be reading and researching those. And also doing things like you're doing now and listening to Tai Lopez, his friends, and the people that are in the cryptocurrency space. That's where you're going to get a lot of good information. Okay, so Allwell Brown says, what's the best way to understand the divisibility of coins? Meaning, how do you relate the value of a coin to the US dollar? So I like to keep this part simple. Use coinmarketcap.com. It shows a price point for your coin. Don't get into too deep about the ways that people look at the crypto value and the different ways people say it in fiat and this and that. For yourself, when you're first getting into it, if it says that NEO is $50 and you have 10 of them, you have $500 worth of NEO. Keep it really simple, the math really simple for yourself. If you start to overcomplicate it, you won't be able to explain it to your friends. You take a lot of the fun out of it. I look at it as if a coin is worth, if Ethereum is worth $600 and I have 10 of them, I have $6,000. So just try to simplify yourself. One coin equals X amount of value times X amount of coins that you own. It takes away the over technicality or over complicating what's happening here, because we're already in a complicated space. So you want to keep things simple for yourself and for the people around you. Even McAfee talked about decentralized exchanges on Twitter. I guess this will be the next big thing. So the reason the exchanges are so slow is they're so backed up. Coinbase has 1.3 million customer service orders that are backdated currently. So even though they hired 1,600% new employees this year, they're just so far back behind, it's really hard for them to catch up. So will there be more exchanges? Absolutely. We would all like to see a big company like Wells Fargo, Bank of America, Chase, PayPal, Square, JP Morgan, Charles Schwab, Morgan Stanley. There's so many big corporations that could create, the New York Stock Exchange themselves could create a better platform, right? E-Trade would be perfect to create a platform. The people that are already creating these large platforms like E-Trade, they would be the perfect ones to create an exchange. And Coinbase, if really for them, they shouldn't be allowing to have 1.3 million customer service complaints behind them. They shouldn't allow 100,000 new accounts a day if they can't handle their back orders. It's just not safe and practical, unless they plan on hiring 1,000 new people, which is really difficult because just because you have the money to hire 1,000 new people doesn't mean you have the wherewithal to train those 1,000 new people and every day 100,000 new people are coming on that have big customer service complaints. Let's go down. What are our thoughts on USI Tech? Be very careful. That's just, they're offering way too much per day. It's insane. I would stay away from that. I keep going down. Yeah. Okay, so you can buy XRP on any of the major exchanges. You can look at Poloniex.com, Bittrex.com, Gemini, GDAX. So when you're on coinmarketcap.com and you see the different prices of the coins, when you click on the coin, within inside of there, you can click and it'll show you where the exchanges are, and it'll show you the volume of what exchanges are selling the most of those coins. Am I buying the current dip? Yes. So there's certain coins that I keep accumulating, but I don't sell. So for me, some of the coins I'm cost averaging backwards because I bought them so early. Like when I bought into Ripple at 27 cents, I still like it at 47 and 73. And you know what I mean? Like I'm reverse cost averaging, but that's because I still like the coin long term. So it makes my price originally higher, but I believe the coin is a long term play for me. So I still buy dips on coins that I like that.
Are you good still?
I'm getting done.
Okay. Yeah, you can keep going if you want. Or if you want to wrap up.
Yeah, I'd like to wrap up if we can.
Okay, yeah. You can do like 2 more.
Okay. All right, so we're going to do 2 more questions. How can we have all the names, coins, wallets, exchanges, and sites in writing for those like me that speak Spanish? You just have to, when you are Google searching, you just search it the same way. You can switch to the Spanish platform version of Google. Can we scroll down? The exchanges will become more international. It's just so new for them to be this big. All right, how do you find ICOs that have potential? Since there's hundreds of them, it's the news. You have to look at all the news articles that are coming out, research it, see things that are in industry that you care about, dive into those, and then really research. Seriously, like you have to research these things before you commit, because sometimes you're committing Ethereum or Bitcoin to an ICO, and that coin would have made you more, that Ethereum or Bitcoin would have made you more just holding it, because their ICO happens today at $1 a coin, for example, but they're not going live for months from now, and months from now that Bitcoin or Ethereum could be worth a lot more. So there's a give and take on those ICOs. Really pick the ICO that you truly believe in. Like I like the Bread Wallet or the ShipChain ICO. I like these type of things because I really believe in what they're doing. The last question is what is an ICO? So an ICO is an initial coin offering. It's just like an IPO, which is an initial public offering in the stock market. So an ICO is a way for new companies or new coins to go out and raise money at a really high fast rate of speed, faster than an initial public offering, an IPO, for a public company. Normally for an IPO, it takes about 2 years and $2 million of legal fees to go public. An ICO, you can do in a month or 2 with a white paper, and you don't have the same types of regulations. They will, and they should, but right now, people are able to raise lots of money through an initial coin offering, where usually they'll go raise, let's say, $20 million in a pre-sale, so you can buy the coins for 50 cents. Then when it's a public sale, the coins might be $1, and that's the time that you can determine from there how much the value of the coin is going to be. But initial coin offering is where you hear about a lot, which is an ICO. So I just want to thank all of you guys, and make sure you do your research.